Okay, so diving in today, we're going to be looking at these new tariffs that have
Hmm.
been announced um, on imported goods coming
Yeah.
into the U.S.
Yeah.
And we've got some interesting stuff to dig into.
Yeah, we do.
We have a whole list of the tariffs that are being applied to different countries.
Right.
And we also have this news report that kind of covers the initial announcement and the immediate fallout.
Exactly.
So hopefully we can kind of give you a clear picture of what these tariffs are, why
Yeah.
they're happening, and what the potential early consequences could be.
Exactly. And hopefully we can do it all without getting too bogged down
Yeah.
in the kind of economic jargon that sometimes comes with these sorts of things.
Right, exactly. And I think that's really important for our listeners because this could really reshape
Hmm.
the prices that they're going to end up paying for things.
Absolutely. This is going to hit people's wallets
Yeah.
if it all comes to pass.
So what I found really interesting, just looking at the materials we have,
Hmm.
is how widespread and kind of multi-layered
Yeah.
these tariffs are. It's not just a simple, oh, we're going to add this percentage to
Yeah,
everything.
no, it's much more nuanced than that.
Yeah,
And I think unpacking those different layers is going to be key
yeah,
to understanding what the potential impact could be.
absolutely. So let's jump right into it.
Okay.
So first of all, there's a universal element here,
Mm.
and that is that there is now a flat 10% tariff
Right.
on goods coming into the U.S. from every country.
Yeah. It's a pretty broad stroke, isn't it?
It is. So basically,
Okay.
almost every single thing that's being imported into the U.S. now
Yeah.
is going to have this 10% added to its cost.
Exactly. It's essentially just a new cost of doing business, of
Right.
bringing goods into the U.S.
So regardless of where it's coming from, what it
Okay.
is, 10% is being added on
Yeah.
across the board.
Yeah.
And then on top of that, we have this whole list of other tariffs, which are being described as
Reciprocal.
reciprocal. And some of these numbers are really eye-popping.
Yeah. Some of them are really big.
So, for example, Vietnam is being hit with a 46% tariff.
Wow.
Taiwan, 32%. Japan, 24%. India, 26%. South Korea, 25%.
It's interesting how those are all kind of in the same ballpark. They're
Yeah.
all kind of in the mid to high 20s, low 30s.
Yeah, and then you get some bigger ones. So Thailand, 36%. Switzerland, 31%.
Right.
Indonesia, 32%. Malaysia, 24%. And then Cambodia is hit with a whopping 49%.
Yeah, that's a huge number.
And this is on top of the 10%.
Right on top of the 10. So you're talking,
Yeah, right.
50, 60% in some cases.
And so what's interesting about these is that they're being called reciprocal.
Right.
And the announcement suggests that these are based on the U.S.'s assessment
Mm-hmm.
of the tariffs that these countries already impose on
Yeah.
American goods.
It's kind of like a tit for tat thing.
Right.
You charge us this much, we'll charge you this much.
Yeah, so it seems like they're trying to say, well, you're already hitting our exports with all these tariffs,
Mm.
so we're going to do the same to you.
Yeah.
And then, on top of that, you have the really big ones
Right.
that are highlighted in the news report.
Mm.
And that's China,
Yeah.
34%, and the EU at 20%.
Those are the ones that are really going to make a difference.
I mean, these are massive economies that we're talking about here.
Absolutely.
And the amount of goods that flow back and forth
Yeah.
between the U.S. and these entities is just
It's enormous.
enormous.
Yeah.
So, I mean, these rates could have a really, really significant impact.
I mean, we're talking about potentially changing global trade patterns.
Yeah.
There's a high likelihood of retaliation from the other side.
Yeah. And so, we see these reciprocal tariffs, and I'm really curious about how they're actually justifying this.
Yeah.
And the news report actually has this quote
Okay.
from the announcement, and it says that they're going to calculate the combined rate of all their tariffs.
Okay.
And because we are being very kind, we will charge them roughly half of what they're charging us.
Right. So it's like they're trying to spin it as if they're doing the other countries a favor
Yeah.
by only charging them half.
Yeah, it's like, well, we could be really mean,
Right.
but we're only going to be half as mean as you.
Exactly. Yeah. It's a very strange way to frame it.
It is. And
Yeah.
it really seems like a direct attempt to kind of mirror, or at least partially mirror, what they're seeing as unfair trade imbalances.
Right. It's this idea that the U.S. is getting a raw deal
Yeah.
in the current trading relationships.
Yeah, but I also wonder, when you start talking about mirroring tariffs and stuff,
Yeah.
it sounds kind of simple on the surface,
It does.
but I feel like it overlooks a lot of the complexities
Yeah.
of how different economies actually work.
Right, because I mean, ultimately, tariffs are paid
Yeah.
by consumers in the importing country. So even if the goal is to kind of level the playing field,
Mm-hmm.
um, the practical outcome might not be
Yeah.
what they're hoping for.
So, I mean, I'm like, even just that quote, calculate the combined rate of all their tariffs.
Right.
I mean, how are they even calculating that?
Exactly. And are they really comparing apples to apples when
Mhm.
you're talking about different economies with different structures?
And then there's the language that's being used.
Oh, yeah.
You have this quote
Hmm.
about the U.S. being looted, pillaged, and raped.
Wow.
And, I mean, that's incredibly strong language.
It is.
And it really signals a very aggressive stance.
Yeah, it definitely suggests that they believe the U.S. is being taken advantage of.
Right, and that they're willing to take strong action
Exactly.
to address that.
Yeah.
So you had this announcement. All these new tariffs are laid out.
Right.
And the first thing that happens is that the financial markets
Yeah.
freak out a little bit.
Pretty standard reaction to uncertainty.
Yeah, U.S. stock index futures saw a pretty big drop. The S&P 500 was down 1.8%,
Mm-hmm.
and the NASDAQ 100 fell by 2.6%.
So a pretty immediate negative reaction.
Yeah, and that's investors saying, whoa, hold on a second.
Yeah, this could be bad for business.
This could really disrupt things.
Exactly. And when there's uncertainty,
Yeah.
investors get nervous.
And particularly when there's the potential for increased costs for businesses.
Right.
And the potential for decreased consumer spending.
Yeah, because if prices go up, people buy less stuff.
Right.
And that hurts company profits.
And then, of course, that impacts how investors value those companies.
Exactly. It's a chain reaction.
Now, what I did find interesting is that
Yeah.
the shares of the big U.S. automakers,
Okay.
so we're talking General Motors, Ford, and Stellantis.
Big players.
Yeah, they also dipped at first.
Okay.
But then they managed to recover a little bit.
Interesting. So what happened?
Well, the news report connects this to the fact that Mexico and Canada are not being hit with these new reciprocal tariffs, at least not right now.
Okay, so they get a pass for now.
It seems like I mean, they already have some tariffs in place.
Right.
But these new higher ones
Mm-hmm.
aren't being applied to them at this point.
So why do you think that is?
Well, it seems like it's tied to other ongoing discussions.
Okay.
Things like border security
Mm-hmm.
and the whole fentanyl issue.
Right. Those have been big points of contention
Yeah.
lately.
So it seems like maybe they're trying to keep those negotiations separate.
Yeah, maybe they're trying to use these tariffs as leverage in
Yeah.
those other discussions.
But it's worth pointing out that Mexico and Canada,
Right.
they're not completely off the hook.
No, they still have those existing tariffs.
Exactly.
It's just these new ones that aren't being applied.
Yeah, so their situation is still a bit uncertain.
Yeah, it's kind of a wait-and-see approach.
Now, it wasn't just the stock market that reacted to this announcement.
Okay.
We also saw a pretty significant move in the cryptocurrency market.
Interesting.
Bitcoin actually dropped below $85,000 following the announcement.
Okay, so that's a pretty big drop.
Yeah, and Bitcoin's often seen as a more risk-sensitive asset.
Right?
So this is a pretty direct reaction.
Yeah, it's like investors are getting out of riskier assets.
Yeah, when there's economic uncertainty like this, investors tend to pull back
Absolutely.
from things that are seen as being more volatile.
Makes sense.
And then, of course, the big tech companies, they also felt the impact.
Yeah.
Amazon's shares fell by over 5%.
Wow.
And the report points to their reliance on imports from China
You're right.
as a major reason for that.
Makes sense.
Yeah, I mean, if you're importing a ton of stuff from China
Yeah.
and suddenly there's a 34% tariff on those goods, that's going to hurt.
Big time.
Yeah, and then they have a decision to make, right? Do they absorb those costs, which would obviously hit their profit margins?
Yeah.
Or do they pass those costs on to consumers
Right.
through higher prices?
And then they risk losing customers.
Yeah.
Competitors who maybe aren't as affected.
And it wasn't just Amazon.
Okay.
Apple and Nvidia also saw their share prices decline. Apple around 5% and Nvidia around 2%.
Interesting.
And this is linked to the tariffs on both Taiwan and China.
Okay.
But it's also connected to their dependence
Yeah.
on the Taiwan Semiconductor Manufacturing Company.
TSMC.
Yeah. TSMC.
They're a huge player in the chip market.
Enormous.
Yeah.
They produce a lot of the advanced computer chips
Right.
that are used in all sorts of electronics.
Everything from phones to cars these days relies on those chips.
So this just goes to show how interconnected the global supply chain really is.
Absolutely.
You have these tariffs on key regions and on vital components like semiconductors,
Right.
and it could have a cascading effect on these big tech companies.
It can really mess things up.
Yeah, it can impact their production costs. It can slow down innovation.
Yeah.
And ultimately, it's going to affect the prices that consumers pay for their
Yeah,
product.
trickles down.
So we've looked at the immediate market reactions. But what about the rest of the world? How are they responding to all of
Yeah, what's the international response?
Well, Italy's Agribusiness Association, Coldiretti,
Okay.
they've issued a pretty stark warning.
What's that?
They're estimating that U.S. consumers could end up paying an extra 1.6 billion euros a year
Wow.
for imported Italian food and wine,
Ouch.
just because of that 20% tariff on EU goods.
So that's a real concrete example of how these tariffs could hit consumers.
Exactly. I mean, we're talking about things like Italian cheese, olive oil, wine,
All the good stuff.
all that good stuff.
Yeah.
Could become noticeably more expensive
Yeah.
for American shoppers.
That's going to make some people unhappy.
Yeah. And then the International Chamber of Commerce,
ICC.
ICC. Yeah, they didn't mince words either.
What did they say?
They called tariff retaliation a lose-lose game.
Right.
And they're particularly concerned about the potential damage to emerging economies.
Yeah, those are the ones that are often hit the hardest.
Right. And I think it's important to point that out.
It is.
Because, this isn't just about the U.S.
No, this is a global issue.
Yeah.
And when you have these kinds of trade wars, everyone suffers.
Especially, developing nations that rely heavily on exports.
Yeah, because suddenly their goods are more expensive in other markets.
And that can really hurt their economic growth.
Absolutely.
Now, one interesting thing that the report points out is that
Yeah.
some U.S. allies, like the UK, Brazil, Australia, they're actually getting the lower 10% tariff rate.
Interesting.
But even then, it's not all smooth sailing. The report mentions that Trump is still criticizing Australia's beef import policy.
So even though they're getting a lower tariff,
Yeah.
he's still not happy with them.
It seems like there are other issues at play here.
Right. It's not just about
Yeah.
who's an ally and who's not.
Right. It seems like they're targeting specific trade practices or sectors.
So it's a much more nuanced approach
Yeah.
than just saying, okay, you're our friend, you get a good deal.
So the UK government, they've said that they're going to stay focused on trying to secure a U.S.-UK trade deal.
Okay.
And they're hoping that that might lessen the impact of this new 10% tariff.
So they're playing the long game,
Yeah.
hoping for a better deal down the road.
But in the meantime, they're still going to have to deal with that 10%,
Right.
which is going to add costs to UK goods being exported to the U.S.
It's not an ideal situation for them.
Now, the leader of the UK's Liberal Democrat Party,
Okay.
he took a much more confrontational approach.
What did he?
He accused Trump of launching a destructive trade war,
Wow.
and he called for a coalition of the willing to stand against these tariffs.
So he's calling for international cooperation.
Yeah, to push back against these measures.
Interesting.
And that really signals, I think, a significant level of concern.
It does.
Not just from the UK,
Yeah.
but potentially from other countries as well.
This could be the start of a much bigger pushback.
Yeah, and then there's this point that the report brings up that I found really troubling,
Okay.
and that is that some of the world's poorest countries, places like Cambodia, Vietnam, Sri Lanka, Myanmar,
Right.
they're actually facing some of the highest tariff rates.
Yeah. That doesn't seem very fair.
No, it doesn't, and it seems counterintuitive
Yeah.
if the goal is to promote global economic prosperity.
Exactly, because these countries, they rely heavily on exporting relatively low-cost goods.
To developed nations.
Yeah, things like textiles, agricultural products. And these tariffs are going to make it much harder for them to compete in those markets.
So it seems like this could really set back their development.
Potentially.
So let's talk a bit more about the reasons
Okay.
that are being given for these tariffs.
Yeah, what are they saying?
Well, one thing that Trump specifically mentioned is that pharmaceutical companies need to bring their production back to the U.S.
Right.
or face a big tax.
So he's trying to incentivize domestic production.
Yeah, and he tied this to national security concerns,
Okay.
particularly around the production of antibiotics.
Right. So he's saying we need to be able to make our own essential medicines.
Yeah, in
Man,
case something happens.
yeah, we can't rely on other countries.
And we can't be dependent on other countries for these things.
Right.
And he specifically called out places like Ireland,
Okay.
which is a major hub for pharmaceutical manufacturing.
Interesting.
So this adds a whole other layer
It does.
to the rationale behind these tariffs.
Yeah, it's not just about economics anymore.
Right, it's about national security
Yeah.
and self-sufficiency.
And that's a powerful argument,
It is.
especially in times of uncertainty.
Now, one of the analyses in the news report described this approach as a hybrid one.
Hybrid. Okay.
You have that base 10% that applies universally,
Right.
but then you have these much higher rates for specific countries that seem to be based on this idea
Yeah.
of addressing unfair trade practices.
So it's kind of a two-pronged approach.
Exactly.
The broad measure.
Yeah.
And then some more targeted
Yeah.
retaliatory actions.
And it's important to remember that those existing tariffs on Mexico and Canada
Right.
related to border security and fentanyl,
Mm-hmm.
those haven't gone away.
So those are still in effect.
Yeah, they're still there.
On top of everything else.
Yeah, and the possibility is that they could eventually be folded into this new system
Okay.
once those other issues are resolved.
So it's kind of a messy situation.
It is, yeah, and it really highlights the complexity of all of this.
Exactly, because you have these new tariffs,
Yeah.
but they're being layered on top of
Right.
existing trade disputes and policy objectives.
So it's a really intricate web
Yeah.
of trade regulations.
That's hard to keep track of it all.
Now, finally, the investors that are quoted in the report,
Mm-hmm.
they're sending a pretty clear warning
About what?
about the potential for retaliation
Yeah.
from other countries.
That's not surprising.
No.
I mean, if someone hits you with tariffs,
Yeah.
you're going to hit back.
And they actually use this phrase,
Okay.
retaliation day will follow liberation day.
Wow.
So it's like they're saying this is going to happen.
Yeah, they're not even trying to sugarcoat it.
Yeah, and there's real fear of an escalating trade war
Right.
and the possibility of a U.S. recession.
Yeah, because if everyone starts slapping tariffs on each other, it's
Yeah.
going to hurt everyone's economy.
Right, and businesses are going to suffer. Trade is going to decline,
Hmm.
and ultimately it could lead to a global economic slowdown.
Yeah, it's a very real risk.
So just to summarize,
Mm-hmm.
what we've seen is the U.S. announcing these pretty significant tariffs
Mm-hmm.
on a really wide range of goods.
Right.
That includes this universal 10% tariff,
Yep.
and then these much higher reciprocal tariffs
Right.
targeting specific countries,
Yeah.
including major trading partners like China and the EU.
Huge economies.
Yeah, and this announcement has already caused some immediate reactions.
Yeah, the markets are definitely spooked, and
Yeah.
there's a lot of concern about potential retaliation
Absolutely.
and the broader economic consequences.
And I think it's important to remember that
Mhm.
this is going to have a real impact
yeah,
on people's lives.
absolutely.
Like
Yeah.
it could affect the prices they pay for goods.
Right.
It could affect their jobs.
Yeah.
It could affect their retirement savings.
This is not just an abstract economic issue.
Right. This is something that could have very real
Yeah.
consequences for everyone.
Exactly.
So as we wrap up here, I want to leave you with a question.
Okay.
We've talked about these different tariff rates. We've talked about the various justifications.
Yeah, from fairness to national security.
But what do you think the long-term impact of all of this is going to be?
That's the big question, isn't it?
It is. Yeah. How is this going to reshape
Yeah.
global trade relationships?
Mm-hmm.
And how is it going to impact
Yeah.
the way countries interact with each other
Right.
going forward?
And beyond the economics of it all,
Yeah.
what about the political and social implications?
Exactly. Because this is about more than just money.
It is.
This is about power.
Yeah.
It's about influence. It's about national security.
And maybe even ethics.
Yeah, maybe even ethical considerations.
Yeah, because you have to think about the impact
Yeah.
on developing countries.
On the poorest countries in
Well,
the world.
It's a complex issue
It is.
with a lot of moving parts.
So I encourage you to think about these questions
Yeah.
and to keep an eye on how this all unfolds.
Because this is just the beginning of a
Yeah.
much bigger story.
And we'll be here to break it all down for you
Absolutely.
as it develops.
We'll keep you informed.
Thanks for joining us.
Thanks for listening.